Are you feeling the pinch? Seeing prices climb at the gas pump, the grocery store, or when you're looking for housing? You're not alone. Inflation is a buzzword that's making many of us anxious about our financial future. But here's the good news, you're not powerless. In this video, we're going to break down 5 concrete, actionable steps you can take right now to not just survive, but potentially thrive during inflationary times. So, what exactly is inflation? In simple terms, it's the rate at which the general level of prices for goods and services is rising, and consequently, the purchasing power of currency is falling. Why does it matter? Because it erodes the value of your savings and can make everything you buy more expensive. But panic isn't a strategy. Action is. Tip 1. Reinforce your emergency fund. Our first and arguably most crucial step, fortify your emergency fund. During uncertain economic times, having a robust emergency fund is your financial bedrock. If your car breaks down or you face an unexpected job loss, you don't want to be forced into debt at high interest rates, which often get worse during inflation. How much? Aim for 3 to 6 months of essential living expenses, or even 6 to 12 if your job is less secure, where keep it in a high-yield savings account. It won't beat inflation, but it will minimize the erosion compared to a regular checking account and keep it liquid. Tip 2. Pay down high-interest debt, especially variable rate. Next up, aggressively tackle high-interest debt, especially variable rate debt. Think credit cards, personal loans, or even some adjustable rate mortgages. As central banks raise interest rates to combat inflation, your variable debt payments will go up, making them even more expensive. Strategy: focus on the highest interest rate first, the debt snowball or debt avalanche method. Why now? Paying down debt offers a guaranteed return equal to the interest rate you avoid, which is often higher than what you can get from other investments, especially in a volatile market. Tip 3. Invest in inflation-resistant assets. Long-term growth. Number 3 is for long-term growth. Consider investing in inflation-resistant assets. While cash loses value, certain assets tend to perform better during inflationary periods. Stocks. Historically, equity stocks have outperformed inflation over the long term, especially companies with pricing power or those in essential industries. Real estate can be a good hedge, as property values and rents tend to rise with inflation. Commodities, gold, and other commodities often act as inflation hedges, but can be volatile. Tips: Treasury inflation-protected securities. These are U.S. government bonds designed to protect against inflation. Their principal value adjusts with the consumer price index. Important note, this isn't financial advice. Always do your own research or consult a professional. Diversification is key. Tip 4. Review your budget and cut unnecessary spending. Our 4th tip is about taking control of your daily spending. Meticulously review your budget and identify areas for cuts. When prices are rising, it's more important than ever to know where every dollar is going. Analyze subscriptions. Are you still using all those streaming services or gym memberships? Dining out? Impulse buys? Can you cook more at home? Plan your shopping trips. Negotiate bills. Call your internet provider, insurance company, etc. to see if you can get a better deal. Why it matters: every dollar saved is a dollar that doesn't lose value to inflation or can be put towards your emergency fund or debt repayment. Tip 5. Boost your income and acquire new skills. Finally, number 5. Look for ways to boost your income and acquire new, in-demand skills. This is a direct way to counteract the eroding effect of inflation on your purchasing power. Negotiate your salary. If you're employed, prepare to negotiate for a raise that at least keeps pace with inflation during your next performance review. side hustle, explore freelancing, gig work, or turning a hobby into a source of income. Skill development, invest in yourself, learn new skills that are valuable in the current job market. This makes you more marketable, potentially leading to higher paying roles or new income streams. Think about certifications, online courses, or even an advanced degree. Inflation can feel daunting, but remember, you have control over your financial future. By focusing on these 5 key areas, building your emergency fund, paying down high-interest debt, investing wisely, optimizing your budget, and boosting your income, you can build resilience and even find opportunities during these challenging times. Start with one, then move to the next. The best time to act is now. If you found this video helpful, please hit that like button, subscribe for more practical financial advice, and let me know in the comments below, what are your top tips for dealing with inflation? We'd love to hear them.